I think something might be breaking in the silver market, but it might be actually your last chance to buy silver at all, because I think it's, the market is actually drying up, and we might, who knows, in 2 years or 3 years, maybe the price will be hundreds of dollars. I don't know. So this is not investment advice. It's just me saying that I feel something's breaking here.
What I also want people to absolutely understand, because we're talking about that currency reset, that is when you will see gold and silver expressed to its true fundamental value. And at this point, it's somewhere in the vicinity of $40,000 on gold and about $2,000 on silver. So even at 45 or 55 or 10,000, whatever, it's still undervalued.
In a historic week for precious metals, gold and silver have shattered records, with gold hitting a staggering $4,500 per ounce and silver surging past $70. This metals frenzy is being fueled by a weakening dollar and intense safe haven demand as the U.S. intensifies its military pressure and oil blockade on Venezuela. With silver outperforming gold by over 130% this year, the market is entering a volatile new phase where physical shortages are now dictating prices over paper contracts. Renowned analyst Lynette Zang warns that these record highs are merely warning signals of a failing currency and a looming monetary reset. In this exclusive breakdown, she explains why the shift from paper futures to physical delivery is the real story Wall Street is missing. According to Zang, if a full-scale conflict erupts, gold's true fundamental value could skyrocket to $40,000, with silver reaching $2,000. Is this the final endgame for fiat currency? And are you prepared for what happens when the paper markets break? Let's watch clips from Lynette Zang's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
What are you seeing? What are your thoughts on why the precious metals are trading so much higher?
Well, I do think that part of it has to do with the Fed being between a rock and a hard place, because much as they want to lower interest rates to stimulate more money printing and all of that, and therefore inflation, and certainly looking around the globe, geopolitics, we've got war continuing on between Russia and Ukraine. We've got still upheaval in the Middle East and actually between China, et cetera, and the looming potential war with Venezuela and the U.S., what's happening there. But I actually think that this is much bigger than that. I agree with you. And it really started almost this time last year, last January, when we saw a major shift in the gold and silver markets. And in terms of the spot market, which I'll come back to in a second, but typically in the US, this is a contract-based market. They're just selling and buying the futures to get that little pickup in, the difference between the two. However, what happened last January, you might recall, is a big shift in demand, so that instead of those contracts being traded, big entities were taking delivery of the physical markets. And so I think that what's happening today is really more attached to that, as that trend cycle where it was the paper contracts that were dictating the global price. I think now it's more the physical markets that are dictating that price, because in those contracts, there's no scarcity. They can create as much gold and silver as they want to. And frankly, I'm a little surprised that that's not happening more, to be perfectly frank with you. And I'm talking about from a government perspective, because a rising gold price is an indication of a failing currency and a looming crisis. And I find it really interesting, all of the talking heads on, Bloomberg and CNBC or any of those those supposed news channels that are pushing an agenda. And what are they saying? Well, if you're concerned about geopolitics, buy gold. If you're concerned about the overvaluation in the markets, buy gold. I mean, now when you hear those talking heads touting buying gold, it's not the contracts that a lot of the people are going to if they really understand what's happening in the markets, because all you're getting there is a reflection of the spot market, but it's the underlying structure of the pricing mechanism that is now going to physical supply and demand, which is one big reason why silver has been outperforming gold this year. Nothing goes straight up, nothing goes straight down. I would expect some bouncing along the way. And the spot gold and silver markets are technically extremely overbought. We could see some profit taking and some pullbacks in there in the paper contracts. That doesn't necessarily mean that in the physical world that there wouldn't be extended premiums, because there's a finite amount of this in the physical world. But I would think that by the end of next year, what we're going to see is silver spot substantially higher than it is even now and it did break 70 a little bit earlier today. And spot gold, I can see easily somewhere around 5,500. But what I also want people to absolutely understand, because we're talking about that currency reset, that is when you will see gold and silver expressed to its true fundamental value. And at this point, it's somewhere in the vicinity of $40,000 on gold and about $2,000 on silver. So even at 45 or 55 or 10,000, whatever, it's still undervalued. This is your light. And, honestly, if we do indeed end up in an overt war, meaning if the U.S. ends up, because President Trump is also talking about Colombia next, right? So if the U.S. ends up in an overt war, because of course they're in a covert war all this time, then it would not really surprise me to see spot at easily 7,000 on gold and probably 400 or 500 on spot silver, and they would still be undervalued. That's really what I need people to understand, is that you're not going to get any good price discovery from Wall Street.
Independent analyst Clive Thompson dives deep into silver's warning signs. Eastern physical markets are pulling away from Western paper prices due to vanishing deliverable metal. Upcoming Chinese export controls set for January 2026 will choke global flow, and shorts may soon face forced cash settlements. He urges demanding physical delivery now before real scarcity hits. Could this be the moment silver supply truly breaks wide open? Watch to the end for Clive's bold outlook. Now, let's watch some clips from his interview.
Today, I'm going to talk only about silver, because I think something might be breaking in the silver market. But something much stranger happened. Yesterday, when silver leapt up to $68, the price in Shanghai on the spot market leapt to $70. That was a full $2 higher than the spot price in Western markets. Now, that's not something which is supposed to happen, because arbitrageurs should be able to step in when it happens. And then the price in Shanghai continued to climb to 71.50. So what's that telling me? It's telling me that the physical silver, which is needed to carry out the arbitrage, i.e. delivering physical silver into Shanghai, which can be shipped and can be traded straight away, even though it's not there, it tells me that the physical silver isn't physically available. The market's drying up. Oh, way, my goodness me. So we've got the spot price of silver on, the spot price is $69.36 as we speak. And you're not going to believe this, the Shanghai price is $73. So it's $4, $73.00. So the Shanghai price now is $4. I'm looking at the chart here. Maybe I can show it to you on my iPad. It's the widest spread ever, I believe, above the spot market. What this means is the silver isn't available to deliver it to the spot market, which is Shanghai. Let me see if I can show you this. I don't know if you can see this. We're looking at the top right-hand corner where my thumb is here, and you can see the spread. The red line is Shanghai, and the blue line, or the turquoise line at the bottom, is the spot price. The gap has widened dramatically in the last day to $4 spread. Well, it's always been a few cents higher, maybe 50 cents higher, 25 cents higher, up to $1 higher, but $4 difference is way higher than ever. So that's telling us something. Now, we mustn't forget the silver supply is going to become a little bit more constrained over the coming months, next year, in fact, and beyond, because from the 1st of January 2026, China is bringing in export restrictions. Now, that doesn't mean to say that nobody will be able to export silver from China, but it means that you have to follow. Only big companies will be able to do it, and they'll have to follow a lot of rules, and they'll have to get permission from the government for any export of silver, which will only be allowed in certain circumstances. And I'm not going to go into all the rules, but the point is, it'll be a lot harder for silver to be exported from China, which basically means that silver coming to the Western markets will be more limited than has been traditionally. So what we're getting is a situation where there's probably a lot of shorts out there on the COMEX exchange in America who shorted silver, but can't get their hands on the physical silver to deliver if and when someone is demanding delivery. So if you have a futures contract, my recommendation to you is demand delivery while you can still get it, because we might get to a point where it's not possible to get the delivery. To protect these shorts, they basically say, okay, everything settles at cash, and you don't get silver, you get cash, but at a price that they decide, not the price you decide. But it might be actually your last chance to buy silver at all, because I think the market is actually drying up, and we might, who knows, in 2 years or 3 years, maybe the price will be hundreds of dollars. I don't know. So this is not investment advice. It's just me saying that I feel something's breaking here.
As both Lynette Zang and Clive Thompson warn, the precious metals bull market is accelerating into a structural shift. Physical scarcity now dominates, with Eastern demand pulling metal away from paper markets and China's impending export licensing regime poised to amplify global deficits. This Christmas Eve pause after record highs offers a rare window. Secure tangible gold and silver as real wealth insurance before industrial shortages and geopolitical risks drive the next explosive phase higher. Don't wait for the reset to catch you unprepared. If you found their breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.